moving fast enough into privatization. Now, the program is there, but it has to be implemented. And the same thing is true of all these other emerging markets, that with volatility, we're going to get a situation where there's a sellout of the market for no good reason.
This is the Times Television Network, and you're watching ET Now.
Hi there everyone, thanks so much for tuning in. You're watching Baina Sarna Weekend and I'm Avan Bash.
And I'm Megha Chadha. Well, we've got a jam-packed half an hour lined up for you, so let's give you a glimpse of all that we will be discussing. First up, of course, stock-specific queries is what's on the card. So Sterlite Industries, Bajaj Electricals, as well as HDFC Bank is what we will be talking about.
Not just individual stock queries, we have our Portfolio Advisor segment. So today we will be discussing Mr. Shyam Sundar Sangai's portfolio.
Well, on the show today then, we've got two very special guests here with us. We've got Sudeep Bandyopadhyay, the MD and CEO of Testimony Securities, joining us on the fundamentals of the market. And Prakash Gaba of prakashgaba.com joins us to discuss the technicals. Well, let's go right ahead and take up the first query for the day then. This comes in on a Sterlite Industries, and Vasanthi from Bangalore has sent it in.
I bought Sterlite shares, 100 shares, per share 175 rupees 1 year back. Now also it is a loss. So shall I hold it or sell it?
Okay, that's the first query which is coming in, and looks like she's losing out on that investment. Prakash, in light of the fact that it's been in a range of 112 to 94 in the last 1 month, what would you advise her?
Well, she's bought at 175. She's sitting at a tremendous loss. I've seen the structurally is negative structure, but looks like the structure near the lows around 90-95 zones seems to look like might hold here. So it might go up. The first target to be on the upside is 130, and then if it goes up, crosses 130, then the target could be 160. I would advise her to hold A and B, even add some more here. Looks to me structurally that there's not much downside. When I see don't see much downside, the best thing to do is to hold on A and add. And she should sell out at 160. It's a long hold, but then there's no other option.
So Vasanthi, on the technicals at least, Prakash is advising that you hold on to that investment and look at averaging out possibly and adding more stocks as well. But Sudeep, what about the fundamentals, and especially given where we are in the commodity cycle at this point, what would you advise her?
Well, unfortunately, he's sitting on a big loss, and, the way we envisage the entire commodity cycle and companies in that space, my recommendation would be to exit. Very clearly, the commodity cycle is entering a phase where immediate recovery looks difficult. Considering what's happening in the global markets, considering particularly what's happening in China, we'll feel that commodity prices will continue to remain subdued for some time. So we don't see any immediate major recovery in the price of Sterlite Industries. So our recommendation will be to exit at current levels.
Okay, an outright exit coming in on the fundamental side. Vasanthi, hope we got your query answered on Sterlite Industries. Well, Vasanthi seems to have sent in another query, this time on Bajaj Electricals.
I bought Bajaj Electricals, 100 shares at the rate of 358 paisa per share. That is also long term, 2 years back only I bought it. Now also I am in loss. Shall I sell it or hold it to get some profit?
Okay, so Vasanthi is losing out on this investment in a Bajaj Electricals as well. And given, the kind of trajectory the Kanta has had, Prakash, from levels of close to 230, it's corrected a fair bit. So what would you advise her to do?
I would say exit. I thought she said she's bought at 175, is holding closer to around, trading now around 191. She's making around 15 bucks or so. She should be exiting because structurally, I don't see much upside. Even if it does go from 200 levels, breaks out, is going to get stuck at 220, 230. So I don't see much upside, while it could come down. If she's making money, exit. If she's not, I would exit.
So the upside is capped according to the technical charts, which is why she should exit. Sudeep, would you have a similar view given the fundamentals of the company?
Yeah, unfortunately, again, I have a similar view here. It's an excellent company. As a company, they are doing lots of things which are right. But couple of things, the company's margins have been under pressure for last few quarters. And secondly, because of the deficit monsoon situation in the economy, we believe that consumer durable sector and companies like Bajaj Electricals will be under pressure in the near future. So as things stand today, I would recommend exit at current level from Bajaj Electricals also.
Okay, so Vasanthi, both the technical as well as fundamental experts are suggesting that you exit from Bajaj Electricals. Hope we got that query answered. But let's move on to the third query for the day then. This comes in from Amit Bhora in Hyderabad.
I have 15 share of HDFC Bank at 500 rupees. Currently, I am making some profit. I am looking for a long-term horizon. Should I continue to hold or should I sell it out?
Okay, fortunately for Amit, he is making money on this investment. But Prakash, given that it's above all of its daily moving average, it's bounced off its 200 daily moving average twice in the last 1 month, you think it's advisable for him to stay in this investment?
See, when I look at the HDFC Bank, right from 50 rupees levels to around 350 levels, and again from 150 to 500 levels, I see the structure. The structure is positive. I do not see any weakness. When I do not see any weakness, why would I sell A, B? His horizon is long term. He should continue to hold it. And his cost is 500. I would say that he should hold it A and B. He should add it if a dip comes. The best way to add it is follow an SIP method, systematic investment plan. Keep adding some stock every month or so. Because structurally it can go up to levels closer to 625, 650. It may have its expansion and contraction. It might contract and come down. But the basic structure is strong, so finally we're going to see an upside, so I will continue to hold it and add if a dip comes.
Okay, so Amit, Prakash is clearly recommending that you hold on to your investment. In fact, look at adding on to your holding in an HDFC Bank on a regular basis in a systematic manner. But Sudeep, talking about the fundamentals of an HDFC Bank, what do you make of it, especially given the numbers were already out? So do you think this performance is likely to continue, especially as the bank is already trading close to all-time highs?
Well, unfortunately, you're absolutely right. Bank is trading almost at its all-time high. And the P multiples at current level for HDFC Bank doesn't, favor a buy recommendation. Also, I like to point out here that the, earning growth momentum is not coming from the core business. It's predominantly coming from other income. And that's not a very good sign. And we are not confident about HDFC Bank maintaining its growth momentum in the near future. Considering all this, at this stage, we cannot recommend, adding on or even holding on to HDFC Bank. It would be better if you exit HDFC Bank at current level and shift to some other private sector bank.
Okay, so that's a divergent view coming in. Sudeep is saying that he's not sure about whether the bank can continue that growth trajectory, so he's advising an exit. Well, Sudeep, given that you said that he should exit the counter, are there any other counters within the banking arena that catch your fancy? Perhaps even mid-cap names like Federal Bank or Syndicate Bank?
No, well, I would like to recommend a large cap bank and a competitor of HDFC. ICICI Bank looks very good at current levels. And we are expecting that bank to show significantly improved performance. And we are expecting significant price improvement in the ICICI Bank in the near future. So as an investor, I think, one should exit HDFC Bank, book profits, and look at entering ICICI Bank at current levels.
Okay, so big thumbs up coming in for an ICICI Bank, Amit. So hope you got your query answered both from a fundamental and a technical perspective. But keeping with banks then, Prakash, and specifically talking about how the bank Nifty's performed in the recent past, what do you think is going to be happening probably in the week that's coming up now?
Well, banks Nifty, the way banking index has gone up from these levels of 9,100 to 10,800, to my mind, looks like it's getting exhausted up there. We could see some correction in the bank part of it. Perhaps we could see levels closer to 10,300 or so. It's not going to take out 10,800 in a hurry. So structurally, I feel the banks have run up a bit too fast and needs to rest a bit. Maybe a pause. It may not come down, but certainly the upside seems to be capped here for the time.
Okay, that's a word which is coming in on the Bank Nifty, which over the last 1 week has shaved off close to 1%. Well, that's it with answering the individual stock queries. We take a quick break right here on Buy Now, Sell Now Weekend, but we will be addressing Mr. Sangai's portfolio after this short break.
Have been wanting to tighten the CDR norms for a while now. This is mainly to stop the perceived free flow of corporates into the CDR. I had mentioned on Monday, as far as the CDR cell is concerned, it has already ratified the new CDR norms and they are already implementing most of these norms.
When regulation sets the pace for India Inc., it breaks exclusively on ET Now.
मारा तो डरना क्या थोड़ा हीरो बना तो डरना क्या ओ ग्लैमर ही है कोई चोरी नहीं है जरा फिल्मी बना तो डरना क्या
Open and close the markets with the top technical analysts in the business, Ashwini Gujral and Mitesh Thakkar, only on ET Now, always thinking markets.
Wonderful to have you back with us on BNSN Weekend.
Well, we've handpicked a portfolio in our Portfolio Advisor segment, and Mr. Sangai, it's your lucky day. Let's take a look.
Businessman Shyam Sundar Sangai has what it takes to withstand the ups and downs that come with investing in stock markets. He started way back in the 50s in Kolkata and now trades and manufactures metals in Mumbai. Sangai took up stocks in the mid-80s and even tried to find his way into the BSE Brokers Club. While he lost out on the membership, Sangai remains an avid investor while following some ground rules for buying and selling stocks.
I am more interested basics of the company. That is my first feeling, that they will not play. They will not play. If the market falls, if the international conditions goes wrong, then of course you will be a loser. But otherwise, no. I never do F&O. I never do short sale.
Although Mr. Sangai does not pay too much heed to stories and rumors floating in the market, he does use them as a starting point to further study stocks that he is interested in, and believes that it is not always possible to be on the winning side.
I get plus in 90 shares, but I get minus in 10 shares, and both are equal.
Mr. Sangai's current portfolio is in fact a mix of large caps as well as some beaten down mid caps which he has picked up at relatively low prices. And recently, it is a Reliance Infra that has got his fancy.
I am too much interested in infra shares. Not as a builder. No, infra.
But is this a portfolio that can make him the returns he wants?
I want less or more, but I want some good positive results.
Let's find out from our experts the best. best way for Mr. Sangai to multiply his returns. Okay, so that's the profile and portfolio of 74-year-old businessman Shyam Sundar Sangai. He is currently, dealing with a 7-stock portfolio. And Sudeep, given that he's got interest in the metal space, so we've seen quite a concentration on the metal basket, and also a few names where he seems to have done bottom fishing, the likes of a Kingfisher and an an ARSS Infra.